Community Capital Management is an independent investment advisory firm that specializes in fixed income investments that make a positive impact to communities within the United States. We manage over $2 billion. It's all for clients who want to have a market rate of return on their investments and be a part of their community's economic development, affordable housing, rental housing, small business, and support for the environment. Well, Community Capital Management takes a very conservative approach to how we invest our clients' money. We invest in high credit quality instruments. We tend to be benchmarked against the Barclays U.S. aggregate bond market. We try to take less interest rate risk than the interest rate risk of that index. The value that we believe we can generate for our clients is by investing in a core bond strategy, all in the U.S., all in U.S. dollar denominated instruments, but always in support of what we call impact investing for communities in and around America. That work we've been doing for 17 years. We have some clients who've been with us for that entire period, which we're enormously grateful for. We also have a lot of new clients who've come into the field fairly recently because of the focus on impact investing around the world. Well, most of our clients ask Community Capital Management to invest in a way that is mindful of the Barclays U.S. Aggregate Bond Market Index. And what we've done over the 17 years that we've been doing this kind of work is map the areas where we see opportunities in affordable home ownership, in rental housing, in small business, in the environment, in other impact themes. We can map those to the various sectors of the Barclays Ag. We do not own, as a general rule, U.S. corporate bonds, so we're able to manage the portfolio in a way that's less volatile and delivers returns that we believe are competitive with the Ag. So we believe that transparency is key to successful impact investing. We want our clients to know where we're putting their money, and we manage a fairly robust database where we track the actual individual instruments that are contained within the securities that we buy. So a client report that we would give to one of our clients has all of the standard financial report, how did we do against a benchmark, what was our yield, market value, up, down, sideways, etc. But we also talk about how many jobs are contained in the securities that we own, how many affordable housing units, and how many first-time home buyers were able to buy a home because of the financing that we provided. Well, we do the transparency for multiple reasons. One is we believe that we're making promises to do the best we can to invest in community economic development. We don't expect anyone to take our word for that. We think we need to prove it by showing our clients where their money has gone. So we like to make our role as investment manager, the fact that we might be managing a fund or a portfolio for someone, make all of that transparent, let the client see where their money's invested. We do that both quantitatively and qualitatively. We do some mapping. So for example, if a client is interested in a particular, say, Minnesota, we can show them what we've done in Minnesota, where we've invested, how their money's been supporting community economic development in that region. We also encourage clients to ask us to invest in a particular part of the United States. So we allow people to do very, very focused or targeted investments, which we then we take their direction and we then invest in portfolios in support of those instruments. So we do that for reporting. We think it helps us with our performance. No matter how highly rated an instrument is and who's guaranteed it, it's our job to look beyond that and do a real use of proceeds analysis of where each instrument that we own is, what it's supporting, where it's located, and why we believe it is an impact investment. So impact investing has grown quite a lot. It's grown in assets, and Community Capital Management has experienced asset growth, which we're very happy about. But we've also seen new entrants, and we've seen mainstream firms develop strategies for impact investing. We've seen new initiatives around support for impact investing. For the first part, we think that's great validation of the space. Community capital management, we've been doing this for 17 years. It has been lonely. A lot of us been doing it long enough to remember when people said you couldn't have a economic, geographic, or social overlay to your portfolio or your performance would suffer. Thankfully, that we don't hear that so much. I think there's been a lot of academic studies that have shown that performance is a factor of many things and that investors can, if they wish to, invest in a way that's consistent with their values and beliefs. We also think as a boutique firm, we manage $2 billion, but it's all in impact investing. We think it's part of our DNA. And so we're not sure as a firm comes in and does 95% of their work in conventional investing and then they say, oh, we have this other specialty. If the client wants it, how that's going to work. It may work fine. It may also be that there's more to it than simply throwing a switch and meeting a client mandate because it's something folks want you to do. We shall see. We think a benefit to the approach that we take is our track record and our consistency. So we've managed through multiple interest rate cycles. We've seen high rates, low rates, and in-between rates. But what we do is establish a core strategy using the tools that we have in our toolkit and put together 100% impact-focused portfolios for our clients. One other benefit that's been getting a great deal of attention lately is because community capital management does not focus for the most part in corporate bonds, we've not been investing in fossil fuels for our 17 years of existence, and we see a lot of new client interest in fossil fuel free strategies or low carbon impact strategies, and so that's become a source of new client interest. So fixed income impact investing is having a second wave or third wave of client interest. At Community Capital Management, we started working primarily for financial institutions. And that was kind of how we developed our track record and worked out the policies and procedures that we deploy. Now what we're seeing, several new waves. Pope Francis has spoken eloquently and consistently about the importance of investors having mission and value embedded in their investment strategy. We're seeing a lot of faith-based investors respond to that and become clients. A lot of our growth is coming from millennials. There's a value system now that maybe didn't exist, say, before the financial crisis, where they don't want a trade-off between return and values and mission. They would like everything to be one and the same. And we're also seeing interest around low carbon or fossil fuel free strategies, which we're able to deploy as well. A lot of our clients at the early stage of the impact investing era were foundations. I call them the Impact 1.0 clients. We're delighted that we still work for many of those same foundations, but also a lot of new mission-related foundations coming into the space as well. Well, for us, specifically impact investing within fixed income, naturally we're very influenced and very focused upon interest rates, both in the United States and around the world. The phenomenon of negative interest rates is not something that any of us imagined we would see, and yet here it is. The Brexit vote in June was kind of a shock, but it also was reflective of the fact that in the same way that we talk about physical infrastructures and we understand that we need to invest in roads and tunnels and bridges, there's also a civic infrastructure. And at Community Capital, we think the impact investing that we do is part of strengthening and enhancing the civic infrastructure for all citizens, for affordable housing, for small business loans, and for other types of economic development. And we think that's very important as we go through what clearly is going to be some very challenging times ahead.